Holy smokers, this ain't no dang jokers, folks. Boy, do we have a lot to get into in this video here today. I want to explain exactly what's going on in the stock market right now. Like, why is the stock market all of a sudden turning over the past few weeks? Like, why are all these stocks all of a sudden going up? We're going to discuss that in this video. I think this is a very important subject. And for me to show you kind of exactly what's going on here, what led up to this and those sorts of things, and a lot of different stocks I want to talk about in today's video in particular. Hope you guys enjoy this as always. And starting out here, we got to talk about Tesla, my Tesla. There's no way we can't talk about Tesla, my Tesla, and what's going on here. I mean, it's a 10% mover here today. Massive move for Tesla after what was really like it was a mixed earnings. Let's just call it what it is, okay? I mean, it was a mixed earnings, but for Tesla in this situation, a mixed earnings is a good earnings because this was one of those quarters that could have been a just complete disaster for almost any other company in the world. I mean, when you talk about one of your main factories has to be shut down for a given period of time, which was the Shanghai factory for Tesla, I mean, most companies would just, completely fall apart in a quarter like that. They would report just a disastrous EPS number, a disastrous revenue number, margins that were just awful. And here Tesla came in with not a disaster, actually pretty respectable numbers considering a horrible operating environment for this particular quarter for Tesla. So it was actually pretty darn amazing what they pulled off there. And it's a one-of-one company that is probably one of the only companies in the world that could pull off a decent quarter in a disastrous situation for this company, right? So that was pretty amazing. And if you didn't know, I have a brand new channel I just started a few days ago. Essentially, it's called Jeremy Lefebvre Makes Money. Hey, man, when you've created a lot of different YouTube channels in your life, you start running out of names for your channel. Okay, and that's the name of the channel. But nonetheless, I did a video last night discussing, or essentially, this channel, all I do is react to different finance videos and kind of give my opinion on what's talked about in that video. And in this particular video, Gene Munster talked about his opinion of the Tesla quarter, okay? And then afterward, like the Fast Money crew on CNBC, like they gave their opinion and things like that, and it was kind of hilarious to kind of listen to that. And I think there's still this misunderstanding of Tesla shareholders, and it's just amazing. Like all these years later, there's still this huge misunderstanding because a lot of these Wall Street folks, what they think that if Tesla misses this number or that number, that Tesla shareholders are going to freak out and sell the stock in mass. That's just not the way this stock works. No one is freaking out over a short-term number if they miss EPS or beat EPS or whatever. At the end of the day, the core Tesla shareholder base is focused on the long term, what's going on long term for the company and those sorts of things. This is not a shareholder base that's going to freak out over some short-term numbers. Sometimes Tesla gets into a hype cycle and attracts a lot of short-term trader money. Tesla has not been that sort of stock over the past, let's just call it year, but specifically this year, right? Because it's been a risk-off market. Risk-off market, Tesla's going to usually underperform the market. So going into this earnings, you didn't have any hype around Tesla. Everybody was already mentally programmed that this was going to be a rough quarter, a messy quarter. So if everybody's already mentally prepped and you don't have any short-term hype in the stock, I mean, you're kind of setting yourself up for an upside situation. If I was back to old school Jeremy, the swing trader guy, okay, I would have loved to play some calls on Tesla for this earnings, or maybe even bought the stock straight up going into this earnings, something like that, right? Because you just had a very limited downside. Tesla would have had to come through with a disastrous quarter, misses across the board by a mile in order to get this stock to go down after these earnings. And so, it's just kind of funny just seeing people, have these opinions like Tesla stock was going to sell off big today. And it's just like, it wasn't making any dang sense, okay? I mean, if you look at this company, in 2011, Tesla had revenue of $204 million. $204 million in 2011. This past year, they did almost $54 billion of revenue. I mean, when you talk about companies like that, you almost never see those sorts of numbers. Like, tell me another company that has scaled revenue from $204 million to $54 billion in a decade. You're not going to find those sorts of companies. It's just since 2016, they do $7 billion of revenue, right? This past year, almost $54 billion. So you're not going to find almost any other company with those sorts of insane growth rates. Tesla's kind of a 101 in that sort of situation, right? Next year, 36 analysts cover the stock. They expect Tesla to do $116 billion of revenue. A big part of that number will be if we're in a major recession or not at that given moment, right? And another part of that is going to be like Cybertruck, how fast a Cybertruck ran, right? And so who knows? I mean, the numbers could be anywhere from 110 to maybe 125, maybe even 130 on the upside, depending upon Cybertruck and depending upon the state of the economy in 2023, right? I mean, there's one analyst that has Tesla doing almost $150 billion of revenue next year. I mean, these numbers are astronomical, and there's just no other company putting up these sorts of growth rates that's at this sort of scale now at this point in time. And the best part for Tesla is, like when's it stop growing? You know what I mean? Like right now, Tesla grows as far as the eye can see. Like literally, like what year does Tesla stop growing? I don't know. 2030, 2040, 2035? I don't know. Like all I know is it's a long time from now, right? And so this company has significant growth for a long time. They're on pace to someday do 5 million, 10 million vehicles a year, right? And, that's just where this company's at. That's kind of where it's going. And, people still kind of misunderstand the Tesla shareholder base at the end of the day, right? And some folks look at the forward PE, it's a 60 plus, and they're like, that's, it's ridiculous. It's way overvalued. The stock market in general usually trades at a forward PE of like 15-ish, maybe a little above a 15, somewhere in there, right? Maybe 14, something like that. And so they look at a 60 plus and they're like, oh my gosh, it's ridiculous. It's way overvalued. It's overvalued stock. It needs to come way down. Dude, you're not going to get this stock trading at a forward P of 20, okay? Here's the deal. We just talked about Tesla has this ridiculous growth. When you're talking about those sorts of companies, and you're talking about a company that's likely their bottom line will go up even at a faster clip over the coming years than their top line, right? So meaning essentially, let's say they have a year where revenue goes up 40%. Don't be surprised if their EPS goes up more than 40% because this company's starting to get to major scale now, okay? And especially once the whole crazy inflation kind of leaves us behind, that opens up a whole other margin opportunity for Tesla to obviously increase margins and to just continue to scale the business, right? They have a lot of things holding back the business, the Shanghai situation, trying to get the new European gigafactory up and running in a major way, right? You have a lot of stuff working against Tesla right now. I mean, Elon Musk called, I think it was the previous quarter, he called the European gigafactory kind of a money furnace or something like that right now. Eventually, that's not going to be a money furnace. It's going to just be a profit machine for the company. It takes a, let's call it 3 to 6 quarters to get one of these gigafactories up and rolling in a major way. And then once it's rolling, man, it's a straight profit machine after that. So I just think that's kind of important. Like, when you're talking about these sorts of game-changing companies, they're going to trade richer than the market, and for a good darn reason, okay? That's just the bottom line when it comes to this. And, let's talk about the elephant in the room with Tesla. And so much of a different company, right? And here I am in a situation, I sold off the high majority of my Tesla shares over the past year, right? Not because I didn't believe in the company, just because I thought I was getting a fair value, okay? But here's where things change. All I got is 500 shares left. And by the way, I'm thankful to have 500 shares, okay? But that's nothing compared to what I once had in this stock. Every single time I've ever sold Tesla shares, despite it being for a ridiculous profit over the past year, I've always thought I'm making a mistake. And there's almost no other stock that I ever sell for a sick profit, and I feel like I think this is a mistake. That's the one stock, okay? And believe me, in the private stock group, I've had so many people that are major Tesla shareholders because the amount of people we have in the private stock group that have 6 figures, 7 figures. I think we even got a person or two with 8 figures in Tesla stock inside the private stock group. Those people have tried to talk me off the ledge, but I always made up, I think it's kind of getting rich, the valuation. I always had this company getting to a $500 billion to $1 trillion market cap, so it's already done that. And but at the end of the day, deep down inside, I've always felt like every single time I've ever cashed some Tesla shares, it's been a mistake. And I wouldn't be surprised if I end up regretting every single share I've ever sold Tesla. I wouldn't be surprised if in a few years from now I look back and I'm like, why did I do that, man? With just regret. And that's one of the very few stocks in the stock market. I don't think there's ever been another stock I can look back at and had that type of feeling when I was going to sell it despite a huge profit. Usually it's just a great feeling and you feel like victory, right? Like, oh my gosh, I made so much money on this stock. This feels great to cash these profits. But with Tesla, it's a different animal, man. It's a whole different animal. And so, I think folks that are in the Tesla shareholder base, you understand this. I think a lot of folks that are outside the Tesla shareholder base, they'll never really understand it. I think someday they'll get it. But they just don't get it, and a lot of folks choose to hate on Tesla stock continually through this day, and it cracks me up, man. It just cracks me up. Now, it felt like the good old days on a day like today. I mean, you saw Tesla up huge, The Planet up huge, JWN, Nordstrom up big. I was looking at some of these stocks today, man. I was like, whoo, it's feeling like the good old days. I mean, when these stocks used to go up and up and up. By the way, The Planet keeps moving up basically because there's all, you know, we're further along in the process to potential federal legalization in the United States. We're not there yet. It's still a long haul, but things are moving in the right direction. So they're starting to build some excitement into some of these stocks. And The Planet is one of the premier players in that space. And they're one of the companies that would benefit the most if federal legalization ever came. They're in, I mean, honestly, probably the best position of any public company in the world, in my personal opinion. I mean, you know, if all of a sudden they could start shipping product across state lines with the own brands this company has, oh my gosh, I mean, it would be a game changer overnight. So that's why that stock continues to move up. And as long as we continue to go through this process of potentially looking closer and closer to federal legalization coming, which can't get too excited yet, but if we continue to make progress toward federal legalization, that stock will continue to move up. It will continue to do its thing, and a lot of other stocks in that space will continue to do well as well, right? It's just, I mean, it's in a huge, exciting opportunity, and it seems like it's just a matter of time. It's just a matter of time, okay? Netflix, this stock was also beasting. Now, this is an interesting dilemma I have here with Netflix because I bought 50 shares, you know, recently, not that dang long ago, and it's already up 22% when it comes to Netflix. And I got those shares at 181, and this is an interesting dilemma we haven't had in the stock market for quite some time, where you buy a stock and it goes up a bunch immediately, right? Now, with Netflix, oh man, let's just call it the death of Netflix has been greatly exaggerated, Everybody should have known, like, Netflix's comps year over year were going to be ridiculously tough coming out of Rona, right? And everybody being forced to be home. But here's the thing, we're starting to lap those comps now. And Netflix's comps year over year is going to get easier and easier and easier, and for them to show growth, right? In this upcoming quarter, they're expected to have about 1 million new subscribers. Now, as long as they continue this path of 1 million new, then 1.5 million, 2 million, right? Then Netflix gets back to a growth story, not the insane, super exciting growth story that it once was, right? When it was adding, 5 million plus new subscribers a quarter in some of those quarters. But as long as they're adding 1 million, 2 million new subscribers a quarter, it's a huge win for Netflix, right? And so, yeah, the death of Netflix has been kind of greatly exaggerated. I'm in a position where I'm like, why didn't I buy a lot more shares of this stock? And the reason I ended up buying some shares of this stock is it's trading extremely cheap recently, and still even actually today at 222 or whatever, it's still extremely cheap. And I got my shares under 200. Here's the deal. The last time you could get shares of Netflix for under $200 was 2017. Think about what Netflix's revenue has done since 2017. Think about what Netflix's profitability has done since 2017. I mean, the company's like night and day, how much bigger their brand is since nowadays versus 2017, how many subscribers they have now versus 2017. So in my opinion, this was always a stock that traded very, very rich until very recently. It made such a substantial drop that it's actually gotten very, very cheap at this point in time. Company recently, as far as PE metrics, has been trading under 20. For Netflix, way too cheap, okay? Now, when Netflix is trading at, a 70, 80, 100 PE, too rich for me, okay, as far as forward PE goes. But when you start talking about 20, it's a whole different ballgame. Netflix is going to likely grow much faster than the average stock in the stock market as far as revenue and EPS over the coming years. And so if you can get it somewhere in line with where it's trading at in terms of the market in general, you're getting a very, very undervalued stock. And this is not one of those companies. There's a lot of companies in the stock market, let's say a small cap stock or a non-profitable stock, that people are like, I don't know if I want to own that one. Netflix is just, this is a super profitable company, and they have so much growth ahead of that company in future years, especially on top line and bottom line, and such a worldwide known brand that it's just, I feel like it's not a hard stock to own at all. I heard something interesting. Some folks were talking about on the TV recently, let's call it that. They were talking about, if there's a recession, that's going to hurt Netflix. Absolutely not, okay? That's the biggest bunch of BS I've ever heard in my life. I'm like, what? What are we talking about here? No, okay? Netflix is one of the cheapest entertainment services you can possibly have. I think if people were ever tight on money, I think Netflix is one of the last things to ever potentially get cut, because the price point is so cheap, and to most folks that have Netflix, it's something they absolutely love. And here's the deal, okay? 65% of Americans roughly are still paying for cable. Now remember, cable, most people's cable bill is like 100, 150 bucks. If we were to ever actually go into a real recession where people have to cut back, they're cutting back on cable first, way before they cut back on Netflix. That's $10, $15 a month. I can promise you that. Cable is, if you have cable, you know how expensive it is. I mean, like I said, most people that have cable or satellite or whatever, those people are paying like $100+ a month. So if times get tough, that gets cut way before Netflix ever gets cut. I can promise you that. And so just a very different mentality. I know for a lot of my younger viewers, some of you guys might be like, wow, that many people still pay for cable? Yeah, it's a huge number still in the United States of America, and even worldwide. It's still a large number, and it's very, very expensive, okay? Also, you do keep in mind Netflix, as they just, get a better and better service and more content over time that people love, right? They'll be able to charge, obviously, steeper prices. I don't know if they'll ever get up to the numbers like, cable is, which is like $100 plus for many services, or $70. But yeah, when you're $15, you have a lot of room for kind of upside there, okay? Now, for my chef squad, a lot of folks are wondering, like, when does the chef make a major move? And so in regards to the chef particularly, here's kind of my opinion on that. Chefs in an awkward, let's call it the awkward growth phase. Right now, they've got to prove themselves. They've got to, this quarter they're about to announce here in the next few weeks, we know margins and everything's expected to be kind of similar state to, let's just call it Q1. But Q3 and Q4, we should see margins improve. We should see cash flows improve. We should see them get closer. They're not going to be profitable in Q3 and Q4, but we should see them make progress toward that. And so that's what everybody's kind of waiting to see here in regards to Chef. Everybody knows it's a huge growth story. Everybody knows about the revenue and the store expansion and the SKU expansion, all that. But now people want to see over the next, it's called 3 quarters, margin expansion and getting the cash flows to better and better state. If they see that, there's going to be a lot of folks that come into the stock and obviously want to get involved with it. But it's at that awkward phase. And, the first year I owned Tesla, like that was in an awkward growth phase because they had their revenues going up. And everybody's really excited about that, right? But the stock kept going down and down and down because there was this other side where people were like, look at how much money they're losing. They're never going to get their margins in the right place. They're going to have to dilute more shareholder value, or they're going to have to go out of business. There's talk like Tesla was going to go to zero at that time. So Tesla was in its awkward growth phase. The chef right now is in its awkward growth phase. And in order to get people really legit excited and get big money to start to move in that stock, it has to be more than just a revenue growth story. And they're getting into all these stores and stuff like that, and the sell through and the velocity. It has to become margins getting better and better, profitability getting better and better, and cash flows getting better and better over the coming, let's just call it next 3 or 4 quarters, okay? So I think that's really important. Honest is a little further along. This stock is up 55% from the lows now at this point in time. Honest is a more established company than the Chef. The Chef just launched their brand, the Tattoo Chef brand. I mean, that was like 4 years ago. Honest has been around a lot longer. So there's more faith that Honest is going to get their margins to a better place, I guess you can say faster, than a company like the Chef, and that's why you've seen that one obviously make a very steep upward move, okay? Now let's talk about the state of the market, right? Let's talk about why the market has started to move up. Because here's the deal. The QQQ is now up 13%. 13% from the lows it reached June 16th. I'm recording this video July 21st, so it's a little over a month. A 13% move is pretty darn steep. And everybody's looking at this and kind of like, what's going on here, right? So think about this for a moment, right? If we look at the AAII investor sentiment, which I think is very important to understand kind of the state of investors and what they're thinking and things like that, right? If we go back to the month of June and into early July, look at a lot of those weeks. We had less than 20% of investors bullish on the market for the next 6 months. We had a lot of those weeks. We had 50% plus investors bearish on the market for the next 6 months, okay? Here is the deal. Those numbers you're just looking at, those are very similar to what we saw in the great financial crisis in late 2008 and into early 2009. We saw very similar numbers as far as so few people bullish on the market and just an overwhelming amount bearish on the market for the next 6 months, okay? So here's the thing. If everybody, and almost everybody, is bearish on the market the next 6 months, and almost no one is bullish on the market the next 6 months as it was playing out, eventually you start to run out of sellers. Eventually, there's just a moment in time where it's like everybody that wants to have sold has already sold at that point in time, right? And so you start to almost have nothing but upside there. And the only way you can get the next leg lower is if everything materially gets destroyed even worse. I mean, the fact is, everybody's gotten so panicked and so scared in the market that we've gotten to numbers that we're in the great financial crisis. But let's remember the great financial crisis for a moment, okay? There was a moment in time when we almost lost the entire financial system, where the biggest banks in the world had to get bailed out, where the biggest financial institutions in the world went under, companies that went under that we never thought possible. Unemployment went through the roof, real estate crashed. It was the end. It was game over. And here we are in a moment where just as many people are bearish on the market now as back then. That's crazy to think that that's how bearish the market has gotten, right? So now, in order to get that next leg lower, we need that type of stuff to happen. We need earnings to completely fall through the floor. And I'm talking about companies that were making great profits start losing money. I'm talking EPS down 70% year over year. I'm talking mass layoffs. I'm talking, big banks go under that we never thought possible. You need that sort of devastation to get the next leg lower, or you can't get this market to go meaningfully lower. Remember, at the lows there, we were down, 34, 35% on the NASDAQ from the highs. That's already like a ridiculous move. If you're going to talk about getting 50% plus, you need absolute devastation in the economy. And if you don't get that devastation, then you can't get that 50% move, and you can't get new lows after new lows after new lows. And so this is just very important. Like now the market's looking at what do we have to go off of to get that next leg lower? We need absolute devastation because we've already priced in recession now. We already brought the valuations of companies down massively. We've already figured companies' earnings are going to fall apart. So now, in order to, you have to get we have to see unemployment at 10%. We have to see just devastation in the economy. And if you don't get that, you can't get this market down to 50%. So that's just a bottom line there. And you're just, a lot of folks are looking at it now and they're like, yeah, I'm not so sure. And so you start having almost nothing but upside there unless there's a meaningful change there, because just everybody's already bearish on the market. These are ridiculous numbers we've had recently on that, okay? And so that's what's going on in the market, guys. Hope you enjoyed today's video. As always, make sure you check out my new channel if you're interested in that. All I do is react to the most interesting finance videos that I see out there that I want to give my opinion on. And we have less than 1,000 subscribers. Maybe I'll have it linked as the pinned comment or something like that. And I appreciate everybody that is going to want to join me over there and, check that channel out. So, much love as always, and have a great day. Make some money.